I'm Samantha Brown, professional organizer, decluttering specialist, and business coach. I created Pro Organizers Coach podcast to empower you to reach new heights in your business. I am on a mission to build a supportive sisterhood of passionate professional organizers. So whether you're a seasoned pro or you're just getting started, this podcast is for you. Hey friends, welcome back to the Pro Organizers Coach podcast and YouTube channel. Today, we are talking about everyone's favorite topic, taxes and money. You know, all the things that we have to work on as business owners. And I have Megan Schwan with me. She is the CEO and founder of Sidekick Accounting Services. And she is going to talk to us about all the goodness of that. So thank you, Megan, for being on the show.
Thank you, Samantha, for having me.
I love it. Okay, so first, I actually had asked inside of my group coaching community if anyone had any specific questions. So I thought we would start there. Kylan from the community asks, advice for those of us who are pretty far behind, which, to put this in context, she's in her first year of going into taxes. So she feels like she's far behind. I should say it that way. And she says, and now it seems too overwhelming to even know where to start. What would be the best first steps? And I wanted to ask that and get us started with that because I remember my first year, I felt that way, and probably year 2 and 3, to be honest with you. Like it feels so overwhelming.
Yes.
And you feel like I'm the only one that just doesn't know how to do this. So what are maybe some first steps that advice you would give?
Yeah, so definitely not an uncommon problem. And, when you first said far behind, like we've had clients that are several years behind in taxes. So you're really not doing too bad to be addressing this now. But really the first thing is to really just start making steps toward taking action, right? So what that looks like, especially for businesses and taxes, is you got to have your bookkeeping in order, right? You can't do your taxes unless you have your bookkeeping in order, whether you're using a simple spreadsheet that has different categories on it or some kind of a software. I recommend using a software. You can use a software like Wave Apps, which is free, or QuickBooks is another good one to use. But putting your information in there so that you can start, categorizing your expenses, you can track how much income. That's the information you're going to need to have for tax purposes. And if it's been months and months and months, or now it feels like it's a whole lot, just start working on it 1 month at a time. So sit down, put 10, 15 minutes on the calendar or timer, whatever your best practice workflow is, and just start working on it little by little. And then going forward, once you get everything caught up, which probably won't take as long as you think it's going to, but once you get it all caught up, I would highly recommend doing that on a monthly basis because that's going to help it keep from getting super overwhelming. But just take one step, make it a small amount of time, and just start building on that and get things caught up. Taxes are usually not due until April, so you've got some time yet. But
yes. Well, and the other thing too, for me, what I loved about using a software versus me trying to do it myself, specifically QuickBooks, is what I didn't realize until I pulled the trigger and got QuickBooks and connected it to my bank account, because anyone that follows me knows you have a business bank account. Every transaction goes in and out of that business bank account. And it doesn't have to be a specifically business bank account. It just needs to be a separate checking with savings that you use only for business purposes. But the second you connect that, and you connect your account to the software, it pulls everything from the entire past year. And once you do that, it's like, oh, wait, okay, so now I can actually see everything. And then you can create rules. So anytime a Calendly expense goes out, okay, well, then we know that that's, under like web software, a deduction. Like there's rules you can create where over time, now I don't have to really do month to month. Because every few months I'll go in, there'll just be a handful that don't have rules set up for them. So it gets easier as it goes, is my point. Once you actually like pull all of it, and it's not as big of a hill to climb as you think it is in the beginning.
Yes, that is absolutely correct. Using technology is a great way to get things caught up and make things more efficient. So yes, QuickBooks.
1,000%. I love it. Okay, yeah, so you started Sidekick Accounting, and you've been at this for over a decade now?
Yep, almost 12 years. It'll be 12 years in January. So
Congrats, that's
thank
huge,
you.
and I know that, when we had talked previous, you had said that you started this specifically for, because what is it, 8 out of 10 small businesses don't make it or something?
Yeah, to fail. Yep, is the general statistic, yep, for small businesses, which is pretty staggering.
That's crazy, which goes
Mhm.
to show us that if we are still in business and still working the business,
Yes.
we are in a very small percentage of people. So
Yeah.
something like money and taxes, getting help and getting a CPA and getting someone that can come in to help us is huge. And for me specifically, I know I interviewed people because the first person I chose, I didn't feel like I was getting communication from them, or
Yeah.
everything they were saying when they were talking over my head.
Mhm.
And so I just kept looking until I found someone that actually would sit and explain things to me. And they do
Yeah.
normally free consultations, right?
Mhm.
Or well, I had one charge me like $100, but
Yeah, yeah, so for the most part, I would say most people are willing to have open conversations, at least the quote unquote maybe good ones, or the ones that are gonna be in your corner, right? Because you want somebody who's gonna help you along your journey and help educate you because you don't know what you don't know, right? Which is part of why bringing in an expertise is so helpful, but like you said, you wanna have somebody that's gonna be communicative, who's gonna help you educate, who's not gonna be annoyed by the questions that you might ask. I actually have a freebie on my website, which I'm sure will link later, but it's like 9 questions to ask your accountant to make sure they're being, like, proactive on your behalf. So definitely go grab that if that's something that you're looking to do. And of course, I'm
yeah.
happy to have a conversation too.
Yeah, well, and that's actually a really great freebie for you to have,
Yeah,
and I'll definitely put the link in the show notes, but then, because we don't know what to ask in the beginning, and even that can feel overwhelming. Like, "Well,
right,
what am I supposed to
exactly.
ask?"
Yeah. Yeah, and it doesn't even give you, like, necessarily the answers to look for. It's really, like, how you get answers, gives you a lot of information as well. So that document helps to kind of identify that.
Love it. And so, where are you? Like, I'm trying to think of, because I know I've told you a lot of my listeners, they fall into the category of either I just decided I want to start a business and now I'm starting my organizing business, or they fall into the category of I've been doing this a few years, but now I might be ready to like hire a virtual assistant or hire
Mhm.
help. Do you have any like tips on that part of it once you start actually like getting ready to hire people?
Yeah, absolutely. So one kind of quick trick or hack, I guess you could call it a hack that's been really helpful for people when it comes to this is because it's going to affect your cash flow, right? When you hire somebody, a lot of times that's the concern is like, how am I going to pay for them? Am I going to be able to support paying somebody else? That can be a really hard thing to overcome, right? But the truth is that if you don't hire or you don't delegate, you're always going to be limited to how far you can grow, right? You're gonna
Mhm.
kind of stuck. So hiring somebody is really important if you want to continue to grow and expand and, get to the next level. So the hack that you can utilize for this is think about what you would pay that person. And before you like a couple months before you would actually make that hire, make an account, like a separate bank account, and put that money into that account with whatever cadence you're gonna pay them. So on a weekly basis, if you're gonna pay somebody, $100 or $200, whatever it might be, put it into that account and it's gonna do 2 things. One, it's gonna help you see the impact on your cash flow in your business, and it's gonna help you kind of build a little bit of a savings for that position. So this hack has helped a lot of people hire more confidently because they're like, okay, well, even if, because every hire should give you an ROI. So in theory, when you hire somebody, you should actually grow in sales, right? To cover that hire.
Mhm.
But sometimes that takes a little bit of time to actually get that ROI. So this helps you to kind of solve that gap and be able to hire a little bit more confidently. So that's what I would definitely recommend when you get to that point. You're like, I want to hire, but I'm not sure about it. Start doing that because that's going to help solve those issues for you.
That's a really great hack because then you also, like you said, you have that confidence going in of like, okay, I've got this little
Yeah.
nest egg. So it's
Yeah.
not so stressful. Like, oh gosh, am
Yeah.
I going to make the money this week that I need to make to be
Right.
able to pay them?
Mhm.
And then the other thing is, it was actually a lot simpler for me with having a tax professional, of course, like, I didn't do it, but learning how to like, doing a 1099, like, subcontracting,
Mhm.
to me used to seem so like, "Oh gosh, that's so hard. How do I
Yeah.
do this?" It's literally like there's a form and you just literally kinda need their name, their social, that kinda thing to give to your tax professional, and then you also
Yeah.
keep up with how much you've paid them throughout the year. Done.
Yep. Yep.
Like, it's
Yep.
super
Yeah,
simple.
best practice is to get that W-9, which is the form that fills out all that information, and then if you pay them more than $600, then you issue them a 1099 in January, but your tax professional should be able to help or be using QuickBooks. You can actually file 1099s through QuickBooks as well, so they'll help with that process, which is really,
Oh,
really
I didn't know that.
convenient.
Yeah.
Yeah.
That's really good to know. So, what are some other like typical questions you get, or maybe like topics that you dive into with a lot of your clients?
Well, there's lots across the board for sure. I think probably some of those initial questions of like starting up and then like getting to that next level probably comes down to like pricing, things like pricing. Definitely the conversations around taxes as well is a big one. And I guess to just kind of answer those for taxes, a lot of times that's something that's really stressful for people is like they don't know how to plan for it. They don't know what they're gonna owe. So what I always recommend is to save like 25 to 30% of your net income. So if you're tracking your bookkeeping, this is why bookkeeping is really important. Having your sales minus all of your expenses, that number that's left over is your net income. So if you take 25 to 30% of that, put it in a separate savings account every month or every week, whatever you want to do, and just leave it there. So that when you come to taxes, because everybody's different, their tax liability is determined by a number of different factors. But if you save that 25 to 30%, for the most part, it's going to cover the majority of any tax liability that you're going to owe. So it's very helpful when you're saving through it throughout the year and it's not as stressful. And then the other thing is pricing because, you got your business has to be making money. It has to be profitable. Otherwise, you're eventually going to go out of business or you're going to go into debt trying to sustain a business that is not profitable. So, profitability comes down to when you sell something, what's left over, which for, an organizing business, a lot of it's going to probably be your time, but you want to make sure you're still accounting for your time in that cost. And I know sometimes, I don't know how everybody does it. I'm sure there's people that do hourly and some people that do packages. When you do packages, especially, you want to make sure that you're still making enough per hour that it's going to cover your costs that you're going to be able to pay yourself. So, really breaking down what those fees are. If you're bringing products or if their client is paying for the product, you want to factor all of those things in there to make sure that you're profitable and paying or pricing things enough where you can pay yourself what you need or what you want to get paid as well. So breaking those things down is really important as well. And then going back to like reassess that periodically, like at least once a year is probably the best practice for that. But those are definitely
Absolutely.
some of the things we talk about.
Yeah. Well, and like anyone that's listened to me for any length of time, they know, or if they've taken my courses, they know that I talk about like create not that's why I said earlier, not just the checking account, but you need a savings account with it. So
Yeah,
because for me, it was easier. Like before I'd even pay myself for a session, I'd put that 25% into
yeah,
the savings. Then I would pay
mhm,
myself.
yeah,
And because then I always knew that money was there, especially
mhm,
that first year or two, because you just don't know, like you said,
right,
if you have kids, if you like what tax brackets you like, it's so hard to try to
yeah,
figure all that out the first year or two. And then on top of that, whenever it comes to the pricing, so I actually teach sessions. And I do that because for me, I know I'm getting paid every single day I go to work. And it's not somebody that's bought a big package from me that maybe, oh, now they want to cash in and they paid me 4 months ago. And then now I'm essentially feeling like I'm working for free in a way.
gotcha, yeah,
And then it also helps with not doing hourly because when people hear like $75 an hour, it's like, whoa, what? That sounds like
yeah,
a lot. But
right,
if you say 297 per session and it's a 3 hour session, all of a
mhm,
sudden that doesn't sound, it's like, oh, the whole session is this price. And it
yeah,
just makes it more simple for us as organizers and business owners, but also for the actual client or prospective client to say yes,
Mhm.
let me hire you because I know the cost of this.
Right. Yeah. It's easier for them to plan. It's easier for you to plan, right? Because then you know how many sessions you have to sell to get to that monthly number or weekly number that you need. So yeah, I definitely am a big fan of value or package prices, pricing or session pricing, like you said.
Yes. Yeah, no, absolutely. Okay, so actually, I have a question because this came up in the membership the other day. So, a few of the ladies are just starting out, they had gotten their EIN number first, but then they have decided they actually would prefer to start an LLC. And with the one I'm thinking about in particular, I don't think for her it's gonna be that big of a deal because she has not actually launched the business yet. So she's gonna launch with the LLC.
Okay.
But I was wondering if you would talk a little bit about like EIN versus LLC just to help people
Sure.
understand.
Yeah. So I guess I'm trying to think 'cause it's a little bit complicated, but I guess the overview of it is that the EIN is something that you get from the IRS, and so and it can be you can get an EIN as a sole proprietor, as an LLC, as a partnership, as a corporation. The IRS itself does not actually recognize LLCs as a separate entity. So the way that an LLC gets taxed depends on if it's a partnership or a corporation or a sole proprietorship. Most people do what they called a single member LLC, and so it's treated the same way as a sole proprietorship, which a sole proprietorship is like when you would use your social security number. The LLC part of it really usually comes from the state side. So you have to register your business as an LLC with the state, and then you get the EIN with the IRS, which is how you do all your financial documents. If you hire, if you open up a bank account, they want your EIN number. So it's a little bit confusing. But I guess for that particular client, one of the questions that I would ask is like, what type of EIN did they create? They should have gotten an IRS letter
She
that'll
did
let
an
them know.
LLC one. She did do
Okay.
an LLC one.
Okay. That's, yeah. And that's pretty common where people will do like, they know they need to go to the IRS and get an EIN number. A lot of times they do this LLC on the IRS, but what they're missing is the state side. And that's really what makes it an LLC is on the state side of things. So that would
So
be
the
the
fir-
what you
so
would have to
step
do.
Okay, so essentially, because the way I explain it to everyone is your EIN is kind of like your business's social security number,
Right.
right?
Yeah.
And
Mhm.
and so it's the way they track you and all of that. But if you do go ahead and get your EIN through the IRS, but when it pops up, it'll ask you, are you doing this essentially as a sole proprietorship or as an
Right.
LLC? If you go ahead and click LLC, then when you go to your state, will it still be that same EIN or will they give you a new? Do you know a new EIN if you
So the
go?
state doesn't give you EINs. It's just like it's the registration for it's like to operate in the state, you gotta have a registration. And they usually it's I think it's called more of like a state identification number. And then if you have a sales tax or withholding tax, something like that, you may have to get like a state ID number that's attached
Mhm.
to that. But usually you start with the state side of it too because of the name. Usually if you're like trying to pick a name and you can't pick the name because somebody else has it, you got to start on the state side and then get your EIN from the IRS. And it usually asks on the IRS too, like which state did you register this business in? So the state side kind of comes first. And you don't get an
Okay.
EIN number from that. The EIN is only from the federal government, but you might get a state ID number which is different from your EIN, but attached to it, if that makes sense. So it's a little bit confusing. I
Yeah.
definitely recommend working with somebody or getting
Well,
that's
and
suggestions,
with
but
the sole proprietorship, so registering for the LLC with the state is through the LLC part of it. You still have to
right.
go to your Secretary of State, which is what I tell everyone to do. Like, go to your Secretary of State,
Mhm.
and then the EIN is through the IRS.gov.
Right.
And so, because each state is so different in what they expect from you,
Mhm.
and like you mentioned the sales tax ID number. So a lot of states that affects us as organizers is when we're getting products. So
Right.
some states will allow us to like just keep track of it and like pay, like if I went to Target to get products, I can just go ahead and pay at Target the tax The state's fine
Mhm.
with me just paying the tax there because the tax got paid, and then I can resell it to my client for the amount
Right.
with the exact amount that I paid for. But then in certain states, you have to use your state ID to not pay tax at Target. Then you
Right.
as a business add the tax to it, then you resell it to your client with the tax
Right.
added. And then
Yeah.
you have to pay the state the taxes instead of
Yeah.
Target paying the state the taxes. It's
Right.
this horribly confusing
It
thing,
is very confusing.
which is why it matters to have a CPA on your side and,
Yeah.
in your corner answering these things for you is because
Mhm.
the one people that we don't want mad at us is the IRS or the state.
Right.
So the 2
Or the
people.
state. Yeah.
Yeah.
Yeah, the 2 people. Yeah, and like you said, every state is different and has different requirements, and so you really have to it's very state by state specific and sometimes even county, so
Yes, especially in, like, Florida, California,
Yeah.
Virginia, you have to get, like, an agent to get your like, everything is so tedious, but
Yeah.
you can find out a lot of information at your Secretary of State for your
Mhm.
specific state of
Right.
exactly what you need to do and the steps you need to take. Okay, so let's talk a little bit about, like, like, write-offs and deductions and that kinda thing because I still do not understand fully the deductions. I mean, obviously, I know, like, okay, if I'm, getting a new computer or if I am, whatever, like, of course, it's for business and then that's, something. But I think the part where a lot of us don't understand is A, our vehicles, because as organizers, we're driving to the client's home, but then most of us are hauling off. So we're like driving products there and then we're hauling away maybe like donations, that kind of thing.
Sure.
And then also a lot of us work from home. So that's the other one
Mhm.
that like I really wanted to dive into because having a home office and just
Yeah.
kind of explaining that a little bit.
Okay. Yeah, so the when it comes to vehicles, it can be a little bit tricky because part of it depends on how your business is organized, but I'll focus on just like sole proprietorships and single member LLCs. When you have a vehicle that you use for both business and personal, a lot of times your best bet is going to be your mileage deduction. So making sure that you have an app or a spreadsheet or a log to track where you're going, what your starting mileage was, what your ending mileage was, how long, what you were doing, how long it was there. So some information and the IRS does allow you to use a mileage log of just like start end time and then your calendar as kind of like the documentation or description of it. So keep that in mind. But using some kind of an app to track that is going to be important. And then you get to deduct the business miles related to, or the miles related to business. So that's going from your house to their house to Goodwill or wherever it might be, or to the dump or wherever it might be, buying products, going to and from buying products. So anything related to business usage is mileage that you can write off and document. You can also go off of like if you have a larger business, I would say, where you're using a vehicle a lot for business, it might make sense to purchase a vehicle for your business and then be able to write off actual expenses and depreciate that vehicle. But that's definitely a conversation you want to have with your tax professional to see which way makes sense. If you have an older
Mhm.
vehicle, a lot of times mileage is going to be your better deduction than buying, but if you're buying a new vehicle and you might wanna replace it every, like, 6, 7, 8 years or something like that, maybe doing the depreciation would make more sense for you. So it really depends on the scenario, but definitely mileage, and either way, you have to technically track your mileage, so make sure you're still doing that regardless of what way you go, but having that is a big deduction that a lot of times people miss because they didn't keep track of it throughout the year, and I think it's up to, like, 70 cents a mile, so that's a pretty significant deduction that can add up really fast, especially if you are, traveling quite a bit for your business. And then when it comes to home office, that one can definitely be a little bit tricky in terms of compliance because you're supposed to have a separate space in your business for your home office. So you can't use your kitchen table and like write off, that part of your business. It has to be like an actual room that you're using for your business and you can deduct a portion of your, rent, utilities, landscaping, anything like that. If there's major repairs, It's partially deductible. If you have, like, if you upgrade, if you buy a house or, you move in and then you want to paint the walls or, something gets added into your office space, I don't know, whatever it might be, those are 100% deductible if it's specific to that space. So that can definitely be a good deduction as well, and people miss that. There are some accountants that are like, "Oh, it's gonna throw a red flag." That's not true anymore. Maybe it was, like, a long time ago. It doesn't throw up a red flag if you have a home office deduction, but you wanna make sure that you're doing it properly and that you're in compliance with it being used for only business usage and not that it's a mixed use space is kind of the
Oh,
biggest thing
yeah.
for that. Mhm.
Yeah, that's actually funny you say that because I think my guy said that it would throw up a red flag.
Yeah.
But I will say mine is also it's kind it's not I'm using it as my office, but it also has my washer and dryer in it. So,
Oh,
it's
sure.
kind of this, like yeah,
Yeah.
and when we were at the house we were at before, it was, like I mean, it was the room I was using, but that was right around COVID time, and back then,
Sure.
tax people really did feel like it was gonna throw a red flag because
Yeah.
it was still such a new thing. Now I feel like
Yeah.
everyone has a home office
Yeah.
that they use for business. If only Google and Apple Maps and all of that would actually start,
Right.
helping us be able to show that as well. So, I love that you talked about those, though. Are there any other, like, write-offs that people miss? Because obviously the mileage and the office are common things
Mhm.
people miss.
Yeah, those are definitely things people miss. If you are using like a payment processor like Stripe or Shopify or Square or something like that, the other thing people tend to miss is the merchant account fees because they're only going off of what gets deposited into their account. And a lot of times they're pulling those fees off the top before it gets
Yeah.
deposited into your account. So you want to make sure that you're accounting for what's called your gross sales. So that's like the sale number that you actually get paid. And then the merchant account fees is like the offset to that. We've had in the past where people didn't realize that and they were only going off of the sales number for what got deposited, but they're going to get a 1099K from that payment processor and it's going to show the total amount before those deductions get taken out. So then you can end up owing taxes if those numbers don't match. So definitely paying attention to that is going to be a big one that we see pretty often. Another one is insurance. So, like if you have some kind of liability insurance, sometimes depending on where you are and who you're working for or what type of clientele sometimes they want you to have liability insurance or workman's comp insurance. If it's related specifically to your business, those are things that you can write off under the business as well. And then just generally speaking, the IRS defines business deductions as or business expenses as anything that's ordinary and necessary to the operation and growth of your business. So basically, like
Oh,
looking through those lenses can help. So if there's, courses that you're taking to help further you, if you're working with a coach or, you have an accountant who's
ahem.
doing, right, exactly. Shameless plug.
Say hello.
If you're working with an accountant who does your business and personal taxes, a lot of times that's something you can write off 100% under your business. So just thinking about
Mm.
those kind of things can be, or looking through it through those lens can help you get an idea of what you might be missing that actually is related to your business. If you're buying office supplies like forms or pens, anything related to operating your business or growing your business is typically gonna be something that you can deduct for your business as well.
I love that. Like, I've been taking notes. Like, I I never really paid attention to the merchant account fees, right?
Mhm.
So
Yeah.
I don't know if I've been getting that deduction or not. I need to ask my guy. But then also just a lot of what you're saying, like I didn't realize that is how the IRS defines business, right?
Yeah.
And I think that helps kind of shine a light on like, oh, okay. So like networking events or like if,
Mhm.
like you said, if I'm taking courses, especially as organizers, because there is no like organizer school, which is why I
Right.
created the academy. Because
Yeah.
when I was starting, I had no one telling me, okay, here's step one, here's step two, here's step
Right.
three. And so realizing, hey, all of these are deductions are great to know. And then, the fact that they see the value of working with a coach in business, because there
Mhm.
is extreme value to that. There's just a lot of different things that I guess the typical business owner, like we didn't get into business thinking, "Oh, great, I'm gonna learn about taxes." Like,
Right.
it's just not
Yeah,
something that, like,
exactly.
our brain goes there. And so I love that you bring a lot of those up, and I'm sure, like, especially once they start talking to someone, or actually, if you wanna go ahead and, like, tell them how they can get a hold of you if they're
Yeah.
interested.
Yeah, absolutely. So you can go to chatwithmeg.com. It will take you to my website. And there's a link that you can book a call with me or follow me on our all our socials, or they'd have like a chat bot thing that you can text me through that as well. So yeah, definitely reach out if you have any questions or just want to have a conversation. I also have a free Facebook group that I do a lot of trainings in related to finance and business operations and all of that good stuff, and it's called Your Accounting Sidekick, and you can go to youraccountingsidekick.com, and that will short link you to the Facebook group as well. I would love to
I love it.
connect.
Yeah, I'm writing it down right now. Free Facebook group.
Yes.
I mean, that's honestly a really great idea. Like for you, I tell a lot of my girls too, like once they get to the point of like working with clients and stuff, like having a free Facebook group where you go in and just do little like quick things that you know
Yeah.
about, that you're kind of like we are. Like we don't realize how what we know, like the things that are so easy for us to understand, other people are like, "Wait, what?"
Yeah. Yeah.
And I'm sure it's exactly the same for you, and that, just those basic things sometimes can help
Right.
change someone's life. And I love that you called it sidekick accounting because obviously from day one, for you, it's been all about being, the business owner sidekick and being able to help
Yes.
them grow. And so I think that, I love that for like, honestly, that's an amazing, amazing thing. Well, thank you so much for being on the show. And if you guys are
Thank you
on
for having me.
YouTube, leave a comment and I can either, forward it to her, I can answer it, whatever. Honestly like super thankful that you took the time to come on here because I
Oh,
know
thank you
that
for having me.
taxes are such a thing for all of us,
Yeah.
and yeah, right, and I appreciate everything that you're doing, and then for those of you listening, we appreciate you. Go check all of the links in the show description, and we will catch you in the next episode.
Thank you.